Well, thank you again for joining us here on Monday. I'm Marlin Bohling with you, your tour guide to the ag commodities. Let's take another look and see how things are faring on the corn board with our quotes provided by Bar Chart. So on the March contract right now, that corn is trading 2 cents higher. And right now it's trading at 682.5. However, we still have that spreading taking place between the March and that new crop December contract. That one is down 3/4 cent. We're at 5.95 1/4. So not much changing on the new crop contract right now. On soybeans, they're starting to firm up a little bit now. We have March currently at 15.48 1/4. That would be up 5 3/4 cents. Now we're up 6. July soybeans now 5 3/4 cents higher on the day at 15.28 1/4. Checking out the new crop November soybeans, they're 6 1/4 higher, and we're at 13.85 per bushel. All right, let's shift gears and go to the wheat complex. We'll start in Chicago. Remember how we were sharply lower overnight in Chicago wheat? Well, we've bounced off of that low from last night by over 11 cents now. So now we have March wheat a 1.5 higher at 7.87 1/2. July now a 1/2 cent higher at 7.99 1/2. Now 3/4. So one tick from hitting $8 once again. And on Kansas City wheat, after plumbing the depths there for a while, you have March now off of its low of 8.96 1/4 to now trade at 9.05 1/4. That would be just 3 3/4 cents lower. And July new crop is down 4 3/4 at 8.77 1/2. So signs of life in the wheat complex after what was kind of a dismal overnight trade. In Minneapolis, you have March now trading 3 lower at 9.27 1/4. And if you look at the July, we're down a nickel as it stands right now. Cotton market, look at them go on the March. We're up 116 points at 86.43 per pound. And December, 66 points higher at 85.52. Well, at this point, I want to call on the one and only Chris Swift of Swift Trading. He's based in Nashville. He joins us in studio right now, in person, live and in living color. And we're going to take a look at what this means to the markets. Very choppy open to start out the week here.
And we ended the week last week like that. On Thursday, we were down sharply. Friday, we were up sharply. Overnight, we were down sharply. We come in this morning, and we're back up again. So I think a lot of it is just having to pull on the old crop that the U.S. has and around the world, and we just don't have the new crops in place yet for deliverability. And so China's still needing, and we saw last week one of the hog houses that China had built, a 26-story hog house, which of course having a controlled environment needs a clean feed source, and that's where we think a lot of the soybean meal demand is coming from, is to be able to feed those hogs in that controlled environment.
I'd hate to work on the bottom floor.
It would be a little nasty.
All right, so let's talk about this. The market's chopping around the way they are today, and just not, I don't know if they're really accomplishing a whole lot. That tells me that there really isn't any major news to focus on. It's
no,
more
they're really not.
Minor stories. Just kinda...
Exactly. They're just trying to find some coherence here. You know, everything needs to kind of move, and if they can do that, everybody gets to then benefit from the grain markets not moving volatilely back and forth or trending greatly higher or greatly lower. Everybody can then manage their margins to whatever the corn market is narrowed down to in price range.
You know, nothing seems to really change in the weather outlook for Brazil or Argentina. Brazil, they keep talking rain that would keep pausing the harvest and maybe the planting of safrinha corn. Argentina, they keep talking a little more dryness all the time, but that's nothing new, and the crop's already pretty well croaked, you know, from what I understand in many areas. Is the trade just kind of waiting on maybe USDA's ag outlook for them for direction?
It's possible. I'm under the impression that the increase of grain grown in the north section will make up for what was supposed to be in the south.
Right.
So we were going to have maybe like 110% growth out of South America. Now it may just be 100% as we have the bigger crop in Brazil and the smaller crop in Argentina.
Okay. Well, I'll tell you what, we'll come back in just a moment and we will take another look at our livestock trade. We had a surprising open this morning. Kind of blew the lid off to the upside. We'll see if they're still at it when we come back. All right, we're talking with Chris Swift of Swift Trading. He's based in Nashville and he's in studio with us right now. So let's take a look at our livestock trade. We were talking about the lack of movement in the grains. Well, we had plenty of movement on the livestock trade to start out this morning. We have the April live cattle on our quotes from bar chart showing a trade at 164.52. That would be up 57. June live cattle 45 higher at 160.20. Then you get to the feeder cattle market. And on the feeders today, we still have April a dollar higher at 191.67, even though it's backed off of its earlier high here by about 80 cents or so. May feeders are 97 higher at 195.52. And on lean hogs, well, lean hogs, they still have April up $2.40. We're at 85.72. That's a $0.50 off of its high from a little bit ago. And you have the May lean hogs now up $1.80 at $95 even. All the months from May through July are way over $1.50 higher, closer to $2 higher. Let's go back to Chris Swift. On this hog market here, what's with the explosion there, the upside?
You know, I'm not real sure. There is a seasonal tendency for all the livestock to trade just a little bit higher for this last week, and then they all take a pretty hard seasonal downturn after that. But I can only assume they've had some hard selling all last week and probably just a little bit of reprieve from that. And to the lean hog index, if we look, it was down just a little bit at 78.05, but it's trying to find a bottom there. So if we can find a bottom in the lean hog index, then maybe we can hold some of the premiums that the futures have.
All right, now let's look at a live cattle chart here.
Okay.
And when you look at that, I mean, we've been at pretty lofty levels.
Oh, absolutely.
We had a higher cash trade again last week. So look at that pattern there. What do you see? Another leg up or what?
Looks like a stair step to me. So it just keeps stair stepping up. And we saw last week the first evidence of the really hard weather that's been going on. We saw the week over week, the beef production was down about 3%, year over year down 4.3. And although we're making up for that in alternative meat proteins, we're still losing quite a bit of beef. And we're going to probably see that for the next couple of weeks in lower carcass weights.
Really? Okay. So it could be an interesting time.
It'll be a lot of fun. More volatility. That's the one thing we can expect.
Interesting stuff. Well, thanks for coming in.
Absolutely. Always a pleasure, Marlin.
Appreciate that a lot. Chris Swift of Swift Trading with us right here in studio.